So we have some really great panelists with us here today. I'm going to let them reintroduce themselves to you for each of the, if you have not been here already to hear their talk. My name is Samantha Stein. I'm with TechCrunch. I'm our Director of Special Projects and our Startup Battlefield Editor. So I travel all over the world looking at early stage tech with the thesis slightly too soon and deciding what companies we should feature with our largest editorial coverage. So can you each tell us who you are and what brings you here today, and just give a slight recap of the talk you gave, just in case our audience wasn't here for it?
Sure, yeah. Thank you, Samantha. So my name is Navroop Sadev, and I opened this panel. I'm a fellow at MIT, also UCL, at the Center for Blockchain Technologies. I'm also building what is a trading platform for crowdfunded equity, so that's really how I got into the blockchain rabbit hole. And my background is in economics, and this panel is just perfect because that's really my work over the past 2 years, and rethinking of what all the changes in our economic structures. And lovely to have folks here. I want to hear more from the panelists.
I'm Amber Fowler. Background is worked Silicon Valley, working under Peter Thiel in various varieties, other startups, and also humanitarian background with different nonprofits and that kind of thing, and then more recently Ethereum Foundation after doing Africa. So I'm here and have a kind of wide background, but really pleased to be up on the stage with you guys and Cal.
Thanks for joining us.
Yeah, hi, thank you for having me. My name is Ohad Samet. I'm co-founder and CEO of TrueAccord. TrueAccord is a growth stage company in the US. We use machine learning and behavioral economics to radically change the debt collection experience for consumers who borrow from lenders and debt buyers and so on in the US. So we work with major banks, issuers, and so on. In my talk, I propose that machine learning in financial services specifically can help change financial services in 3 different ways. One, create financial efficiencies for companies that can be then shared with consumers to make financial services more available. 2, personalize the experience to introduce more empathy into financial services and treat consumers the way they want to be treated. And 3, use behavioral triggers to encourage positive behaviors instead of negative behaviors to encourage better financial health for consumers, whether they're subprime or not.
Wonderful. Thank you all so much again for joining us. So something that ties the thread of all of your backgrounds together is a background in finance. But what each of you touched on today is that the financial systems of the future are going to have qualities that are not strictly financial as part of them. So can you touch a little bit on what those qualities are and why they're so important and why the time is now?
Sure, yeah, I can start with that. So I think I agree with Ohad here when he talks about that we can personalize it and make them more empathetic, right? And Amber earlier talked about how our financial system is designed to be exclusionary. I was attending the first talk yesterday that said exclusion is not a bug, it is a characteristic of the system. And I think that really, is point on, and that's really what I think we can change. And it's funny because I realized that even if you study economics, really at the end of the day, like I mentioned during the talk, you do have to understand the way the human mind works. That is a good and a better starting point than seeing humans as one of the inputs for production, which is really what is the case so far, right? Labor as a unit of production. So I think that paradigm shift is happening and has to happen. And I do know, as a millennial myself, and there are a bunch of studies out there, that the millennials are sort of at the forefront of this revolution, if you may, because they want user-friendly interfaces, they want simpler systems, they want transparency, so on and so forth. And those things and those characteristics need to be part of the system. And really, the whole energy in this space is about how we need to disintermediate most of the industries and not just finance. Right. It really is about how we do need greater transparency. We do need to remove actors which are only there to collect economic rents, because our systems by default are centralized. This is the topography of the network. Every business model, every institution basically has a central node, and everyone has to go through that node in order to access the system or access somebody else in the system, right? So if I have to send you an email, it has to go through the Google servers first before it can reach you. They route it. So I think the bigger revolution is around really decentralization. And that's really why we are here. And my argument has been it sort of goes beyond the technology, and it is our responsibility and the leaders who are in the room right now to ensure that it continues to be the case and doesn't become one more technology to be exploited by the folks who already are in power and have a lot of money.
Yeah. I think there's another point to add, though, that's like no one, I don't think, there's not very much talk about this, but the fact that these new systems like blockchain and different hyperledgers and distributed systems, there's a kind of anonymity that exists that people are not really mentioning. All of a sudden, these future systems, I do believe, are going to be architected by the actual users who are going to use them, as opposed to our existing model, which was architected by a very specific class for that class. And so now, if we can architect systems where everyone is a participant and everyone is represented in that architecture, we're going to actually see solutions that represent who was building them as well. And so I think, and that means, I mean, it's somewhat nice that it's gender agnostic and that it's race agnostic. You don't actually know who are these nodes and who are doing mining and who are on these, you don't actually know, you're a key.
Well, I want to jump in here and say, that's a very good point. Well, first of all, how many people in the room know the difference between anonymity and privacy? Come on, raise your hands higher. There we go, around 15%, right? So anonymity is when your actions are public, but not necessarily your identity. But privacy is when people know who you are, but what you do is private. So when you're designing systems, you need to understand which characteristic are you looking for. It's true that public chains ensure anonymity, but hey, the entire record of transactions is out there. And a lot of the people, like big banks, right, why Corda was built is, well, bank-to-bank transfers do not need to be seen by the whole world. So the public chains don't really cater to the needs of the enterprises or institutions. So just, I just want to leave you with the thought that it really is about what kind of characteristics are required to do exactly what. And that's the thinking that's necessary. So it's not just crypto anarchist or, oh, we are big banks and we want to be proprietary. I think the solution is somewhere in the middle. And just like the internet developed with various standards, developing at the same time, but they talk to each other, I think blockchain technologies would see a similar adoption as well. Yeah.
Ohad, you're designing systems where you have to think about these qualities day in, day out. So what do those look like? What's important? What are we designing for?
Wow, big question. I will say this, to not belabor the point. One of the things that I really like hearing about blockchain and about impact in general for this conference is that it feels like more and more that language permeates into the for-profit world. And when companies like PayPal, which to me is the antithesis of that, says doing well by doing good, maybe that's just a slogan, but as we see more companies saying, well, maybe my earnings per share can be a little bit lower, but I can create services that are available to more consumers, that to me is incredible. And maybe just one more comment is, one of the things that you said is that millennials are changing the approaches to the workforce. And while I agree with that, one of the things that surprised me is, as a company that is specializing in a digital-first approach, a lot of our clients and prospects assume that the reason we're successful, the reason we can beat the old guys, like the bad guys, traditional collection agencies, is because young people want technology. Whenever we do consumer surveys, more than 50% of our consumers are age 50 and more. Now, it says something very sad about the state of debt in the US, that people of that age are in debt. That's a separate story. But my point is that it is broad. Like the revolution that you're talking about is broad across all broad swaths of the population, across age, across gender, across race. That's incredible.
Definitely. So I do want to add here that impact investing, there's a lot of talk about how it may mean lower financial returns, but the data shows us that if you design products and services that are built for inclusion, that are friendly to women, friendly to different colors, friendly to different geographies in the world, your financial returns are actually higher. So I think that argument sort of falls on its face. It really is what we call path-dependent dynamics, that what happens in the future has actually to be built on what happened in the past. And companies, and particularly bigger companies, get locked in to certain technology frameworks. And I think that is really what requires momentum to shift that inertia. And well, I mean, if you don't do it, right, as a bigger financial institution, the smaller companies will come in and disrupt you. So if you want to be at the forefront, there is no choice but actually to include and build for products which are inclusionary. And I think this is tremendous. Just this panel alone, so there are 3 women and there's 1 guy, and this is perfect.
I think that the other piece that's so fascinating just about kind of this change that's occurring is the fact that, for the first time, the old guard is actually quite disturbed and unsettled. I'm witnessing this across kind of all of my investment circle friends. It's like the 50+ crowd actually can't figure out how to get into blockchain, or it's because it's all happening in little chat groups. It's not happening with term sheets and lawyers anymore. And I mean, part of that is obviously the lack of regulatory, organization around it. But I think that it's actually fascinating that the old guard is actually rapidly changing, and it's creating this kind of uncertainty, which is why I think we're witnessing a lot of the kind of throttling or choking down of these systems, is because they're trying to buy time. They're scrambling like mad to just, how can I get into this? How can I understand this? I don't understand it. And so,
well, scrambling they are, but I think, I do want to disagree with that a little. The kind of collaboration that you're looking at in sectors which traditionally would have competitors like banking, like big financial institutions, is unprecedented, right? Now suddenly they are in the same room. And the reason for that, well, is economic efficiency. There is an opportunity to move from old systems to new systems, right? And save billions of dollars in doing so. And so it is in the interest of all of these parties to actually collaborate, right? Cooperation is a better strategy than competition, end of the story.
But it's margin capturing. It's actually it's actually not for the same reasons, though, I would say. So the reasons for wanting to participate in their collaboration is actually focused around capitalism still, which is a very different incentive and a very different intention than I think, a lot of us are kind of collaborating.
I think incentives, to your point, are always economic, right? We have an infrastructure in place, which if we do have to move to a new infrastructure, that's a lot of cost involved, and no one party can do it on its own, right? It's like having a telephone. You have a telephone, you have to call someone, but if the other party doesn't have a telephone, well, it's not really useful.
It's tough, right?
Right, so that's how networks work, and we know this from research on telecommunications and social networks, that more the number of people in the network, more parties that are able to take the cost of this new infrastructure, the higher the value of the network. And by the way, the value is not a linear function of the number of nodes, it's actually an exponential function. So if 10 people are using the network, the value of the network is 100. But if 100 people are using the network, we know it from Metcalfe's law, the value of the network is 10,000 and not 200. So that's how we're seeing a lot of increased market caps and everything. It's because from the way the value of networks work.
Wonderful. So you're each designing for the value of the future, and you're each building that future with your current roles, and you've put many of those pieces in place by your past trajectories. Starting with Ohad, can you sort of just paint us a picture of if all goes well with all you're trying to create and build in your day-to-day work and in the work of those around you in the ecosystem, what does that future look like 5, 10, 50 years from now? And then if Amber could answer after that.
I think, I don't know if we want to go deeply into that, but I think one of the things that I'm hearing is that blockchain and new technologies broaden the base of participation in the financial system. Right? They broaden it to people who traditionally wouldn't have been part of the system. Although, I worry about the lack of diversity in who's holding Bitcoin and ERC wallets. I mean, that's also an issue. For us as a company, it's actually the diversity that goes deeper, meaning across all the population, dealing with people who were kicked off of the system and seeing how we can bring them back in. I always use the analogy of, you walk down the street in San Francisco and you see someone shoot up heroin. It's not a thing that you don't see. It's something that you see in San Francisco in some parts of the city.
Every day if you live there.
Every day, depends where you go, right? So how do you deal with that? For some people who are in tech, the answer is, I don't go to those parts of the city, right? For us, at Record, the answer is we start a needle exchange, because every dollar spent in needle exchange for sanitary needles saves at least $6 in future treatment for STDs and other issues that are transferred by needles. And I think that the number is only for HIV. So for me, that future is being able to go deeper into people who are constantly in crisis mode and reverse that trend and include them. Maybe they're not the most valuable consumers. Maybe they're not buying Amazon Prime, who cares? But they have a reasonable lifestyle that we can support through the use of technology.
So I think to that point, being in Nigeria, for example, I couldn't have a bank account. And as a US citizen, I couldn't have a bank account. And so I ended up doing some finagling and anyway, ended up with a bank account. I can't say that my name was on it, but I had a bank account. And so
can we just hold that for a second?
Yeah.
Imagine, you know her success, her background, all the incredible things she's done all over the world in finance, and in the United States, you can't get a bank account.
No, it wasn't in the United States, it was Nigeria.
In Nigeria?
Yeah.
Okay, in Nigeria, you can't get a bank account.
Couldn't get a bank account.
It's a big country, Nigeria.
Yeah, like 311. Well,
yeah.
but most of the population isn't actually banked.
Right.
And so the reason why the bulk of the population, at least from what I understand and just from being there, is there's a zero trust. Mm-hmm. And I witnessed it every week. We'd pay our staff and their accounts would get locked up or their money would get seized by the bank for arbitrary reasons. Yeah. So there's zero trust in financial systems there. And so when I think about the future and I think about the solutions that we need, I think that offering an alternative and offering alternative, I don't want to say asset classes because I think we actually have to redefine all of these terms. Like all of these terms come with such baggage. Like, the word capital, people have very limited definitions of what that means. And I would say even value, that's another one that we've touched on. All of these terms are kind of ripe for re-examining and resetting these definitions as they apply to different communities around the world. I can't say that my definition of capital is going to be the same as someone who's in Nigeria. They might be trading in, cacao beans. They're not going to be trading in, Bitcoin. But we could, through different ways of, I would say, redistributing these systems, we could actually let them into the conversation so that all of the things that they value and that are part of their kind of economic system of exchange are actually included and part. And so I think that our work, if you will, is to actually create those systems and make them accessible. And right now they're not very accessible, which is I think why you're saying the concentration of people who have wallets and who are participating in Bitcoin and a lot of we're these privileged people. We are these privileged people that have access to this. I would like to see more people have access, but it's just not there yet because we're pioneering. And it's not an excuse. I think we have a big job to do. I think the race is to actually open up these things so that there's like a how-to that's more easy to get into these because then we'll see them fail and we'll see them succeed, but we need to see them fail too because I think it'll inevitably make them stronger. But hopefully, I would like to see in the future kind of a system that allows, or many systems that allow for different forms of inclusion, not one system that's supposed to work for all, because I don't think that works. We've seen that doesn't work.
But can I ask you a follow-up question to that?
Sure.
Okay. But I think that's a great vision, but at the same time you mention decentralization in current cryptocurrency, right? How are you thinking, because I'm not involved in that, how are you thinking about building those systems in a way that those people who are not pioneers, they come and they are not faced with a situation where all the good land's taken?
Well, I mean, like right now, for example, the way that things get solved is very tribal. I mean, like not to say like tribal as in a bad thing, but like tribal in the sense that it's sharing. It's like gift economy. It's like generosity. It's like these are forms of capital that no one thinks about because they're not currently valued in our current economic system. So these are trades that are happening, and they're happening all the time. I mean, I would say that all of us use many forms of currency, but we just don't get valued for using all the other ones except for the one that happens to be commoditized in our current economic system.
Right. Yeah, I agree with most of it. And just to sort of like a quick clarification there. So blockchain is the underlying technology, all cryptocurrencies, but then cryptocurrency is just one of the use cases.
That's right.
I think really it is about the technology and not just the volatile cryptocurrencies. Last time I checked, there were around more than 1,700. That it really is the promise, right? And in terms of the future of the economy, I think it is a collaborative economy that is what we're really witnessing. And the revolution of crowdsourcing and crowdfunding, again, being one of the components, is right in front and center. And speaking as an economist, I think Melanie Swan did this work on what is called economics of abundance, because for the first time we have an opportunity to redefine a lot of these things, momentum to do that. So Economics 101, I started in, I guess, around 12 years ago at this point. Economics is the allocation of scarce resources for unlimited wants, which have multiple uses. Yeah, that's all we studied? 50% of the ones who raised hands? Excellent. So yeah, I mean, think about it, right? Our systems are designed to be scarce. We have an opportunity to, for example, create a token economy because, hey, not every government is benevolent. Not every government has a currency like USD, which acts as a store of value, which, by the way, is backed by things other than just economics, right? Like political power and hegemony in the world. So on and so forth. So that's what we can really redefine, right? We can start from a different starting point, which says everyone by default, first of all, you own your own data, right? There are systems in place which are privacy preserving. So some very fundamental things, and now we can start to rethink, well, what does it mean for our economic structures? What does it mean for economic interactions, right? What does it mean who gets value out of what? What is value? Where does value lie? How is it measured? How is it transferred? And on and on.
Wonderful. Well, thank you all so much. Before we move to questions, and we're just going to have time for a few questions, and so we'll have someone walking around with the mic, and I'll call on you. I'd like you to each just take a minute to think about if you could explain in one sentence, or say in one sentence what you'd like everyone in this room to walk away with thinking about today, what that would be in one sentence. Great. And while they're thinking about that, questions from the audience. Please raise your hand. So we have one up here. So the microphone's coming to you. Ohad, you got your sentence?
I think I'm ready.
Go ahead.
Go ahead.
I would just say, going back to what I said earlier, how do we use mature technologies like machine learning and fintech to do well by doing good? It's a narrow but very deep way, in my opinion, to make a difference in people's lives.
Wonderful. Amber?
I think it's around how can we each do our part to kind of think about inclusion and think about the way that we're interacting in a way that invites and creates belonging. I think belonging is kind of at the epicenter of that. And so creating systems and designing and architecting systems that encourage belonging and then participation, I guess.
So I would say I measure our place in the world through the impact, the positive social impact that you create in the world. And if that is your definition as well, I'm assuming it is, given where we are, then study economics and study how the way discrimination, study how the way things work at the moment, because only then you can change them. And when you study those, don't be afraid to take tangents. Study psychology, right? Study sociology, study political science. And social sciences, liberal arts are really front and center to everything that we think about. At the end of the day, technology is for humans and not the other way around.
Wonderful, thank you. So our first question.
Yeah, after the question, you were talking about the future outlook of blockchain and how you imagine how it will be. Do you think we will have one decentralized network around the world, or there will be like two parallel worlds of a centralized world and a decentralized world? Because I personally think it will be like the excluded people or the people in the global south which profit the most from blockchain technology. Because we in Europe and in the US and so on, we have, if we're honest, we have working transaction systems, we have banking systems, we have accounts and so on. But I think the way bigger impact will be in the developing and in the emerging countries. And my question would be, you think everything will be decentralized, or you will more likely have this decentralized system in the global south? And we stick with banks and governments and whatever. So what's your opinion on that?
So before we go to answers, we're going to have time only for a few questions, so probably only one panelist to answer each. So who would you like to direct your question towards? Ohad, you were jumping in.
Oh, no.
Okay. Amber?
They are the experts.
Seems like an Amber question. Amber, why don't you take it?
Yeah, I mean, I guess I'm of the, I I think it's a much bigger challenge in developing countries to expect that with the level of corruption and with the just sheer volume of the populations, to expect that you're suddenly going to get to a trust system, I think you're wasting valuable time. You have an enormous population that's possible to get in, like actually start participating in a global economic system. And so I don't think trying to convince them that suddenly that's going to be a trustworthy system is worthwhile. I actually think that you have to start mobilizing within communities and giving them tools to actually mobilize and make themselves create small economic systems within communities that can then participate with larger systems and do forms of exchange within other communities. And so that's the way I see it. Did I answer your question?
If I could, just
Yes,
one
please.
sentence. I just want to remind us that there's an opportunity here of people that have fallen off the wagon in the US and possibly in Europe as well. There are people in the US who deal with obesity, rotten teeth because they don't have coverage, diabetes, crippling debt from opioids. And these are people in the developed world in our backyard. So that opportunity, unfortunately, to help exists as well.
Wonderful. We have another question right here.
Hi, this question is for Ohad. Make it short. Do you know of any specific work being done on, with blockchain or even without, addressing predatory payday loans?
Actually, in the debate for or against payday loans, I am a little bit more on the for than the against. I think everybody hates payday loans other than the people who actually use them. Well, predatory is an interesting term. There are very high interest loans that price for the risk of default, and the risk of default is very high because these people are constantly in risk. I liked a lot of elements in the payday rules that the CFPB proposed, which means that you can take the first loan, but you can't take others and then be put into the cycle of debt. I think the big question is here, how do we offer that type of products for people who need them without, okay, maybe without the predatory. I mean, I think we're kind of trying to pour the baby with the bathwater a little bit in the public debate right now in the U.S. I don't know any blockchain-related startups. I do know of MoneyLion, LendUp, and Pedal Card, and several other subprime companies, subprime loan companies in the U.S. who are startups who are trying to make a difference.
My question is, I'm not quite sure who could answer it, but it's when you look at the system that is created today, a lot of people here, ventures, want to create value, but the value they need to start create against or with is the overarching system, the capitalist system, right? So they're forced to, like Zuckerberg, if you think about him, he was a startup once, and he wanted to just create a solution, he wanted to help people, his friends, and at some point when he was doing his IPO, people were thinking, well, okay, will they actually make money? And he was forced to attach himself to the advertisement, basically commoditizing our attention, which has basically resulted in him being in front of the U.S. Congress. And he apologized in the beginning when he was forced to do that, and he apologized also now. So, but he didn't have alternatives. Or?
This
So this is the thing. This is when value and impact and governance actually become really important. So what alternatives do we have to make this actually happen to the way that it scales? I really believe that there should be a shift in what we call value, and how do we measure value and impact, and that's when we actually can create shifts. But so I'm curious to know your viewpoint on that.
I think right. So I think the way you framed this question, it sounds like he didn't have alternatives, and well, I attribute to you, but well, the first alternative is that the subscribers pay for the service and the variety of services that Facebook offers. Now, I was reading this report, I think it was in the Wall Street Journal or Forbes, that said, asking Facebook as to why they've shared our data is like asking Starbucks why they serve coffee. that is the business model.
Yes.
You know what I mean? To sell the data. So in order for the service to be free, that's what you have to do. I think it is definitely possible to have alternatives. That's a decision that they made. That's a business decision. I read about it. I read Sheryl Sandberg's, both her books, and they basically went around Facebook and they asked, you know, in terms of defining the future path and the strategy as to what we should do. And the decision was to run ads because it's easy money.
There's such a simple way. Like, there's such a simple solution that is like, I don't understand why no one gets this. All you'd have to do is say, I'm giving my data. Like, I've never had a Facebook account, for example, and I wasn't allowed to say that at Founders Fund because, of course, that was our largest investment, right? Or, you know, at the time. So I wasn't allowed to say that I wasn't part of the Book of Faces. And the reason why, my objection at the very beginning was, pay me for my data. I'm making your whole network valuable. So you could still make billions of dollars, but you could also pass that value back to the people who are actually making you valuable. And that would not destroy any regulatory body. That would not destroy the business. The business would actually be more valuable because you'd be actually letting people decide on their data sovereignty. And it makes me furious that this is like, I'm like, all he has to do is like, I'll just send you guys all checks.
But I want to say don't be angry because, well, pretty much every business is like that, right?
It is, but
Zuckerberg is under fire, but hey, what about Google? Google has far more data.
They're not the only one, of course.
So as much as I'd love to continue this discussion right here on stage,
And the government.
we need to cut it off so that we can let the next presenter share with the audience their talk. So another round of applause for our panelists here.